Brandon. First one here tonight. How you doing? Just getting ready to get started, Brandon. How's life been treating ya? How's life been treating ya? What's up, brother? All right, Zach MK. Hey, hey, hey. Hey, hey, hey. BAC. Gonna jump right on in. Not even gonna say hi, hello. Just what's Bank of America doing, huh? Bank of America. Here we go. First thing on the list. Are you in a safe place? Are you okay? Hey, Doc, we're doing just fine here. Just a little windy. Kerry King, how are you today? John Watson, good evening. Kingdom Fitness, cool name. JB, what's happening? Let's move over here to like this. There we go. Arizona Sun, how's it going? Kerry King, doing great. That's awesome to hear. Awesome, awesome, awesome. Just to set you guys at ease, I am in a brick house. We are here in St. Petersburg. The storm is a little bit north of us. There is a slight possibility we could hit a electric glitch and be wiped out for the day. Is what it is. Can't do anything about it. But that being said, we're here. Let's see how far we can go. Family is doing just fine. I checked on everyone about an hour ago. Down in Sarasota, they're all good to go. Second coming, how are you doing today? That is absolutely horrid. Won't be drinking that one. Bah. All righty. That's much better. All righty. So, let's get started. Before we do anything, it is the 26th of September. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, and consistent 1% per week. Now, for those you can count, 1% a week is over 50% per year. Where have you ever seen a trading strategy that gets you a safe, predictable, consistent 50% per year? Yep, it's not magic. You're not going to jump in and make it overnight. It is a work in progress, which means you actually have to change your lifestyle. It's a 5 or 10, 15 minute every morning. Take a look at your positions. Take a look at your money. Is your money in the best place for you at this particular time? Redneck, what's happening? All right, so it is Thursday evening, and that means tomorrow is the last trading day of the third quarter. Well, Monday is the last trading day, but we're gonna, Monday also starts the beginning of the fourth quarter. Is what it is. Let's get rolling. Let's start taking a look at some dividend stocks. First on our list for the evening is going to be Bank of America. Yay! Yeah, whatever. Huh. I want to move my screen over a bit. How's that? Nope, a little bit more. It's weird. I'm not getting the whole screen behind me. There we go. Now we get the whole screen. Yay for me. All right, so Bank of America's first one on our list. Now, first thing I always want to see with every stock chart I look at is, where is the high? Where is the low? Where was it a year ago? Where is it now? And which direction is it going? Alrighty, now I like Bank of America. They've been in business for over 100 years. Redneck, yes, we're in a safe place. We're in a brick house. Not a house made of straw. Not a house made of sticks. We are in a brick house. It's mighty. Okay, so 39.52 was the close for today. Currently, I can buy it at 39.58 tomorrow morning. So, what is the closest strike price to 39.58? Well, it's 39.50, and that is 40 cents a share, which is a little over 1%. Now, that's what we're looking for, a good quality company. Bank of America, they've been here for over 100 years. They're not going anywhere. Almost every single town in the United States has a Bank of America. That being said, let's continue to take a look. And for those of you concerned for my well-being, my ginger honey tea is working fine. My throat's feeling a little bit better. So let's continue. All right, first things first. A year ago, Bank of America was at 27.21. See it way down there? Way down there, 27.21. Hey, Chief, what's the progress on... I have no idea where I can find that chart. FAFO chart. Yeah, that's a good one. Bottomed out in the end of October at 24.96. Now, here's our top not that long ago. We got a double top at 44.46 in the middle of July. Now, from the middle of July's high, 2 weeks later, we're at the bottom on the 5th of August. Now, that bottom is 35.14. The last 30 days, here you go, last 30 days. I love the way it looks. Check out the opportunity that is right there. I'm going to point it out and see if you agree. 30 days ago, we're at 40. Okay, dipped a little bit, retraced. This was our previous 30-day high. Look at this. This is what you call resistance. 1, 2, 3, 4. I'm going to read them to you because it just didn't seem to bust out of that. Okay, on the 30th, 40.86. Next day, 40.90, 40.95, and 40.94. These 4 days, that's what you call resistance. It just doesn't want to seem to break through that part. But wait, it did finally right here last week. Well, let's get there. Now, from there, she drops to our 30-day bottom on the 11th, and that was 38.01. A week later, there's our new top, 41.05. Now, we have 4 days to the downside. Here's our new bottom. 1 day to the upside. I like 2 days to the upside to verify that that is a new bottom, because it could be an anomaly and it could drop again tomorrow. But if she's up again tomorrow, well, that's my cue to get in. If I jump in tomorrow morning, well, here's the purchase price, $39.58. The closest strike price is going to be the 40, and that's going for 35 cents a share, which is just a little bit below, wait a minute, yeah, which is right at 1%. Okay? Right at 1%. So that's Bank of America. Enron wants to take a look at CSX. CSX. Alrighty. First thing, as always, high, low, is direction. Look at it, it's just channeling sideways. Love it. Now, that being said, purchase price, 34.32. 34 is going to be the closest at 35. Not quite going to make it, because once you subtract this out of it, you're not bringing in enough. Sorry. Yep. Not enough money on CSX. Sorry about that, Enron. You may like it. The chart may be in the right place. But in my humble opinion, for me, for this particular strategy, it's going to be a no. It's just not there. Sorry. Let's keep on going. What's that song? Let's keep on keeping on. Got to make the best of a bad situation. I can install emergency generator for you. I'm a master electrician. Well, Arizona Sun, I appreciate that a lot. Okay, I don't need an emergency generator. I got like solar panels. I got inverters. I'm very ingenious. I'm very, what do they call that? Renaissance man. I can make things work with what I got. But I do appreciate the offer, though. I'm not one of those check writers. Okay, you got different people in the world. You got thinkers, doers, and check writers. Okay, check writers, those are people just said, yep, get it done. I'm not one of those. I'm one of those that, here you go, this is what you got, figure it out. That's me. If you're stuck on an island, I'm the kind of person you want to have with you. Alrighty. Stuck in a hurricane. See you soon. CSX really did. Dave, what's your best 5 stocks? Larissa. Uh-oh, I missed Larissa's question. There it is. I set my strike price for 97 cents and stock shot up to 109. Is there anything I can do besides cry? Well, Larissa, I need to hear the other half of the story. Okay? Okay, so Larissa, I'm getting one half of the story here. Now, what you always could do is you could roll it forward into another week. This way you're not losing any money for this week, but you get to gain another 5 days and see if it happens next week. Darvin Lee, how are you today? Now, Charles, didn't we look at STZ last night? We also looked at CAG last night. Alrighty. But Larissa, if you want to DM me with your number, I can give you a buzz and we can talk about your situation. Okay? Because I only got half the conversation here. Larissa. I'm looking, Larissa. I can't find the other half of your conversation. Sorry. Can't find the other half. Okay, Charles, CAH, Cardinal Health, CAH. All right, first foremost, Cardinal Health. Here's our high. Look at this, we got a double high. Here's our low. Here's where it was. Here's where it is. This is direction. Look at this big fat channel. It's going sideways. All righty, it's Cardinal Health. What do we think? Well, 110.33 to 110.55. Yep, nope. Nope. CAG, what is that? Conagra Brands. Ooh, I like Conagra. Okay. There's our high. Here's our low. Here's where it was. Here's where it is. This is the direction it's going. Look at that. That's the year direction. Now, there's a lot of different charts to look at. Each chart is going to tell you a different story. Okay. On the 1 year chart, the high, the low, where was it a year ago? Where is it now? And what's the overall direction for the last year? Well, it's clear to see is it going to the upside. Okay, fine. Currently, we're sitting at 33.05. The 33s are going for 40 cents. Well, that's more than 1%. Okay, well, let's take a look at it. First of all, do I like Conagra Brands? Do I even know who they are and what they do? It's a very important question. A year ago, we're at 28.20. The bottom of the year, 25.14, that was at the beginning of October last year. Okay. Our high of the year was 3 weeks ago. Let's take a look at the last 30 days. 30 days ago, we're at 30.60, and it was the 30-day bottom. 30-day bottoms leads to a 30-day top. You got your profit taking, bounce back up, and now she's continuing sideways at 32.49. Now, do I like Conagra Brands? Well, yes, I do. Do the numbers look right? Yes, the numbers do look right. Is the timing right on the chart? I'm not 100% sure. Look, she went up, pulled back, went up, pulled back. Now she's going sideways. That's a tough one. And you're going to have them. Every once in a while, you're going to look at a chart that's not crystal clear. This one's not crystal clear. We got our high, we got our low. Our overall direction is to the upside. But right now, the last 2 weeks, we're just going sideways. Sideways is pretty good for a covered call because we're not really looking for it to go up. We're looking for it to stay basically the same. Timothy David, how are you this evening? Let's take a look at one more chart, and that's going to be the seasonality chart. Now, the seasonality chart gives me an idea of where I think the stock might go based on what did it do last year, the year before, the year before, the year before. Let me explain. Here's a 1 year chart. Way over to the left is January 1st. Way over here to the right is December 31st. Okay? Now, the blue line represents this year. This little blue dot right there is today's date. Right? The red line represents 10 years of movement. This is called a seasonality chart. Bay Elvis. Elvis is in the house. This is 10 years worth of dividend stock information, the movement. I don't know what I'm thinking. That Spotify has legs. Yeah, we're not Spotify, dude. Sorry. That's 20. Yeah, no. All right, so 20 years. This is the area I want to look at because this is the current moment in time. If you see the blue dot, which is today, the end of September, beginning of October, I want to take a look at this area right here just to get an idea. What does this stock normally do this time of year? So, zoom in. Here we go. Well, it's pretty clear to see she's going to make a dip in the next couple of days. It looks like Monday, because see, today's the 26th. There's the 27th right there on the bottom. And then she's going to shoot up. Well, that's clear to see. You need glasses. Actually, I have glasses, but I got stuck with a nail in this eye, so I don't see out of this eye. So that's why that one's always closed most of the time. This one over here is far-sighted. I can see far away, but I can't see up close. So if I put a pair of glasses on, I'll be putting them on, taking them off, putting them on, taking them off. Yeah, no, thank you. I'm not old enough to admit that I need bifocals. Yeah, I'm not even close to that point in my life yet. Maybe another 5 or 10 years. So what I say, just deal with it. Alrighty? I'll give you a pass this time. Detroit Siggy, I appreciate that. And as a matter of fact, for that, I'm going to sleep so much better just knowing. Okay? I'm fine. Don't worry about me. The lighting in here is not the greatest in the world, and I probably should get a bigger screen than these little tiny screens. Make things bigger. All right, so as I was saying, seasonality is based on historical performance. I'm looking at 10 years worth of data. 10 years worth of data tells me tomorrow is the low at this point in time. So, but look at Monday. It should be great. Go to the upside. If I like Conagra brands. So it's not today, but it's a good idea for tomorrow. So let's go back to my standard chart. Here's where we are. Not clear, but if you like it, great. Now I'm letting you know if we drop below 60, we're going to reboot. Right now we're at 66, which is kind of weird for Thursday night. But Thursday night, not a whole heck of a lot happens. Jim Bowman wants to take a look at Riley. I'm 45 and have never worked a day in my life. God bless the NY. Yeah, okay. Detroit Siggy, I feel bad for you, dude. Not working a day in your life, you have been gypped by the sensation of feeling as a contributing member of society. Okay, there's something to be said about getting out of bed, going to work, doing a full day's worth of work, standing back and actually looking at what you accomplished for the day. I think you were cheated out of that experience. Not for everyone, but then again, I get a sensation of accomplishment when I have a good day. Alrighty, so let's keep on going. Riley, R-I-L-Y. First thing, Medicare and Medicaid is not for me. That's not what I said. I said, I feel sorry that you have been cheated out of a day's work. It's a sensation that's hard to express. If you never worked a day in your life, you have no idea what it is. Getting out of bed, going somewhere, doing a good, dutiful job for the day. Glozy, I can't read that. Kagdala? No, no. I can speak Russian, I just can't. I can't read it. It looked like Russian. Let's continue. Riley, first off, here's our high, here's our low, here's where it was, here's where it is. Goes sideways, drops, sideways, drops, sideways, drops, sideways again. I don't know what's going on with that one. I don't do labor. I enjoy creating capital without punching a clock. Yeah, I get it. I'm just saying. There is a certain feeling of a well spent day. Something about taking your hands and creating something from nothing. Like a pile of wood, you throw it together and you create something with it. A lump of clay, you take it and you make something. Pick up the phone and cold call. I have no idea what that means. I mean, I know what it means, but why are you telling me that? It's the only way. Who said I wasn't productive? You said you never worked a day in your life. You said you weren't productive, not me. How are Johnson & Johnson stocks? Well, Johnson & Johnson's a great company, but I don't do Johnson & Johnson because the premiums just aren't that good. Let's get back to where we are. We're on Riley at the moment. Currently, we are at 521. Purchase price 521. So next week's fives are going for 55. Well, that's a nice premium. The 550s are going for 35. Well, that's a nice premium also. Either one, which is great. Okay. Alrighty. Riley, let's go. All right, we'll take a look at Verizon's in a little bit. VZ. All right, VZ. There we go. All right, let's keep on going. Riley. A year ago, we were at 41.47. Okay, we got a high at 43.32, and that was in October of last year. From there, like I said, she goes sideways, drops, sideways, drops, sideways, drops. Interesting movement for this company. Okay, the last 30 days. Okay, this is what it's done for the last 30 days. 30 days ago, we're at $6, drop down to 460, jump up to 680, back down to here. This looks like it could be the bottom and she's getting ready to turn to go to the upside. Great. I love Riley. I actually have some Riley. So at the 520, what does this normally do this time of year? Basically, it looks like she's just going to go sideways for the next couple of weeks based on historical performance. Okay? Not always, but usually, if the company does the same thing over and over and over again, doesn't create anything new, business as usual. All right, so that's Riley. I like Riley. STZ, we looked at that last night. Timothy David. Jiggy Man, PSEC. Wasn't PSEC a no? Hold on a second. Let's go right to the dividends and look at PSEC. PSEC. Historical data, I want to see that. Do you believe that we're at the top? Something's got to break here soon. Yeah, I'm hearing you. Okay, I'm fearing it every day. Every day we don't know what's coming next. Okay, here we are with dividends. I want to go all the way back as far as it goes. Maximum amount. PSEC look at this. They haven't increased their dividends at all. Goes all the way back to, and this doesn't look good. All right. Okay. Back to 2004, 20 years ago. 10 cents, 13, 15, 20, 28, 30, 34, 38, 39. That looks awesome. From 2004 to 2007. Okay. So 2007, we're at 39 cents. 2008, we get 40. 2009, 41. What happened in 2010? It goes from 41 cents a share down to 10 cents a share in 2010. Okay? 2011, 10 cents. 2012, 10 cents. 2013 jumps up to 11. 2014, it's still at 11. 2015, it drops down to 8. Okay, this thing keeps dropping. Jiggy Man, PSEC keeps dropping its dividends. Okay, look, in 2015, at 8 cents. 2016, 8 cents. 2017, 8 cents. 2018, 6 cents. 2019, 6 cents. Okay, 2020, 6 cents. 21, 6 cents. 22, 6 cents. 23, yeah, no. Sorry, dude, I like companies that consistently increase their dividends every single year. Year after year after year. Higher and higher and higher dividends. That's what I'm looking for. If the company is not consistently profitable, well, they're not going to increase their dividends. They're going to keep them the same. Did you build your inverters? No, I just bought them. Sorry. Charles wants to take a look at American Express. AXP. Okay, now American Express is going to be a no because it's at the high of the year. I don't buy at the high of the year. It just doesn't make sense to me. Timothy, Visa, huh? V. That's interesting. First thing I want to see, the high, the low, where was it, where is it, which direction is it currently going? Well, she went up, she went down, now she went up, now she's pulling back. Well, there's a lot of confusion there in that 1 year chart. So let's zoom in, check out the numbers first. What am I buying it for? 271. Great. Well, the 270s, let's get out of those because those only have a day left. Those are worthless. The 270s are going for $4. Well, that's over 1%. That's what I want right there. 270 on the Visa. Well, I know who Visa is. Okay, I like Visa. The numbers look good. Now let's check the chart and see if it's the right time to buy it. Because just because the numbers look great over here, okay, we're getting on more than 1%, what we're looking for. Okay, 1% a week is over 50% per year. My favorite dividend stock, Realty Income. Well, I feel bad for you. I like Wells Fargo and Verizon. Okay, Realty Income, nah, sorry. Okay, that tells me you're not doing your research properly. Look closely at Realty Income. Look at what the yield is for the year. Okay, look at that profit and losses for the year, and you might change your tune. All right, let's get back to this. A year ago, we were at 231. We got a bottom at 228.22. That was back in October. We got a brief high at 290. That was in the end of March. But look what happened just a couple of weeks ago. Well, there's our top right there on the 17th. That is the high for the year. 290, what is it? 293.07. That was on the 17th. That was last Tuesday. That's the high. If Fed drops rate, it would help Realty. Not necessarily. Because Realty Income, it's a REIT. That's one thing. Okay, for people buying houses, well, that's a totally different category. All right, so there's a big difference between a corporation that invests in real estate and dropping the interest rates so that the average person can buy. Hello, James. Hope you're having a great week. Trevor, so far, it's not that bad. I'm above ground. Everything's working. I can't complain. Most people don't want to hear it. Other half think I deserve it. Is what it is. Let's keep on going. Jerry Beard wants to take a look at Walgreens. All right, last 30 days. Here we go. Last 30 days. Now, I love this. Take a look. 30 days ago, we're at 268. That's the bottom. 30 days ago. Jumps up to the 30-day high right here on the 17th. And then she drops yesterday. Today's a bounce to the upside. Okay, well, there's your low. Okay, accumulation right here. Now there's profit taking. The profit taking ended yesterday. Today, she's bouncing back up, going to the upside. If you like Visa. I like Visa. And Visa, at this moment in time, 271, well, the 272s are going for a little over, well, right at 1%. If you like Visa. That's the big question. Do I like Visa? Well, number one, I know who they are. I know what they do. All right. Yeah, so I'm going to write Visa down for next week. Circle it because it looks good to me. Thanks for the response and good advice. How about Macy's, Nordstrom's, blah, blah, blah. We'll get to that in a minute. Macy's is almost a nightly thing. Nordstrom's, not as much. All right. Next on the list, where are we? Macy's is one. Ohio guy, how are you tonight? Midnight Sport Club under 250. I have no idea what that means. Kinder Morgan, are you in the hurricane? Well, the hurricane already passed me. Okay. When? Oh, good. How did you play Macy's? Donald, hold on one second. I'm trying to figure out all these questions that I missed. I missed quite a bit of them. Here we go. Walgreens. All right. So Shaq wants to take a look at Humana. Give me a minute. Humana. H-U-M. 303. 313. Okay. Okay. Here's our high. Here's our low. That's where it was a year ago. This is where it is now. This is the current direction. Overall, for the year, it's going to the downside. Well, here's the bottom here. She's bouncing off that bottom, going back up. That's what I'm looking for. I'm looking for a low bouncing to the upside because stocks go down until they hit a threshold or a bottom. Turn around and go back up again. Do you mess with smart contracts? No, I do not. I'd have to sit in front of the computer all day, and I have no desire to do that. Okay, Charles, we looked at all those already. CAH, CAG, STZ, and AXP. I looked at those. All right, young man, you like Icon Enterprises? Dude, I got something for you. You ain't going to be happy. All right, so currently, 317. 317s are going for 450. That's over 1%. That's what we're looking for. A good quality company. Okay, Humana. Well, we all know who Humana is. Okay, it's giving us a 1%. Do I like Humana? Well, Humana is on my list. Okay, 317. The 317 is going for 450. That works for me. Okay, let's look at the chart. A year ago, we're at 497. We topped off at 530, and that was back in late October. Okay, here's our bottom, 298. We hit it twice. Once in the beginning of April, once at the end of April. From there, she shoots up. Got a double top at 405, once in the middle of July, and again at the end of July. She drops, goes sideways, drops again. Now she's going sideways. Here's our 30-day bottom. Here we go. Where are we? Where are we? Right there. Okay, last 30 days. 30 days ago, 350. Shoots up to 380, down to 310. Okay, that was last Friday. So, 4 days to the upside. Not huge, but still. Okay, take a look. Here's the bottom. 1, 2, 3, 4. 4 days to the upside from that 30-day bottom. Okay, on Monday. So it is going to the upside. It is Humana. It has been around for quite a while. Do you think it's a good investment or not? That's a question that only you can answer for yourself. Is it something I understand? Is it something I like? Is it something I want to hold on to? And are they consistently giving me good premiums? Well, look at them. At the money, it's 550. 4 strikes out, it's 230. Where do I think it's going next? Well, I think it could continue sideways with a slight upward trend. All right, next. Young man wants to look at IEP. I don't like IEP, young man, and the reason why, let me show you quickly. IEP. Okay, IEP, Icon Enterprises. Okay, what I want to look at are the dividends only, and all the dividends. I want to look at all of them. How far back is Icon going with their dividends? Well, they're going back to 2005. 2005, they were paying 10 cents. Look at the numbers closely and then ask yourself, is this something I want to invest in? Well, here we go. 2005 was 10 cents. 2006, 10 cents. 2007, 15, 24. Now, say that 24 for a while. Look at this. 2008, 24. 2009, 24. 2010, 24. 2011, she goes from 24 to 49, then it drops down to 10. Well, it cut it quite a bit. It stayed at 10 for a while. Then in 2013, she jumps up to $1. Okay, 2014, $1.50. Stays at $1.50 for quite a while. $1.75, $2. Stays at $2 for quite a while. 19, 20, 21, 22, 23, and then they cut it in half. Okay, they cut it in half just recently. Why would I want to do this? Okay, Naughty Woodcraft. This is Rich Bruner, second account, just for your information. Cool beans, Rich. Or algo trading at all. No, I don't do that. Sorry. Bob Nealon, how are you today? I just sold a ton this week. Where would you say I throw 10 grand into for the safe play? All right, Donald, I know absolutely nothing about you. I can't give you any advice. I could. My advice would be learn as much as you possibly can, make a good choice. And, oh, here's some good advice. You ready? You're going to love this one. Don't stick your head out too far. It might go home in another car. That's my advice. Don't stick your head out too far. It might go home in another car. I don't give financial advice. I don't. I read numbers, I read charts, and I give you my opinion on what I think based on 20 years of investing. Okay, I don't give people advice. I tell you what I'm looking at. You want to copy my trades? Well, that's up to you. I'm not giving advice. This is just strictly for entertainment purposes. All right. Can you check Verizon dividends? Did we already take a look at Verizon? Verizon's going to be a no. Reason why Verizon is going to be a no, well, look at the bottom of the year, back in October. She shoots up, goes sideways, and then shoots up again, and now it's at a high of the year. No, thank you. I don't play in that game, okay? I play this game here, okay, where she goes up, pulls down. This is where I want to buy, down here. She goes up, pulls back, I want to buy here. Goes up, pulls back, I want to buy here. Up, pulls back, I want to buy here. Up, pulls back, I want to buy here. I don't want to buy at a high because it doesn't make any sense. Buy low, sell high, not buy high and wait for it to go higher. Yeah, no, I don't play that game. Okay, I don't jump on the bandwagon. Okay? Everybody's going one direction. You see one idiot going the opposite direction. That's me. Don't like people telling me what to do. If I see something that doesn't look right, great, don't get me wrong. I love Verizon, I do. But it's at a high. I'm not buying it, waiting for it to go someplace that's never been before. It just doesn't make sense to me. That being said, do you beyond football at all? I play soccer, and I don't watch. I don't watch sports, I play. I'm 60 years old, and I still get out there and play. Granted, it takes me a lot longer to recover than it used to. I'm not quite used to that. I'm used to getting out there playing and having a blast and then doing the exact same thing the very next day. Can't do that at 60. It takes a little bit longer to recover. All right, let's look at the next one. Next. L-U-N-R. Really? L-U-N-R. Lunar match. Okay, go right to dividends. L-U-N-R. I don't think I've ever traded Lunar. And this is why. There are no dividends in the selected time period. Well, if it has no dividends, it's going to be a no. Sorry about that. Timothy, we already looked at Visa. But SOF, what the heck is that? If I'm saying what the heck is that, it's probably going to be no. Amplify Samsung. That can't be right. It is right. Okay, it's a definite no. Now, the reason why SOF is a definite no, look how many dividends they have. Not even 1 year yet. The first dividend was December 2023. They haven't even paid out 1 year of dividends yet. Yeah, no, sorry. John, Hershey's. Ooh, I like Hershey's. H-S-Y, Hershey's. Ooh, that kind of looks good, kind of doesn't look good. Let me explain. Here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. Currently at 190.52, okay? So the 193s, okay, yeah, that's not 1%, dude. Sorry. If it ain't 1%, I don't want to look at it. We'll be just wasting our time. I legalize gambling, yeah. Brad, I got that. Young man, IEP, we already looked at that. It's going to be a no. Do you offer courses? I'm working on throwing one together. Simone, how are you today? Mark Sherman wants to take a look at Win. Ooh. I've been waiting for Win to move up, and it did move up. Unfortunately, didn't move up when it was right for me. All right, so I've had Win since May, waiting for it to retrace. Look, May is back here. Okay, this is where I have May at 97. Currently, it's at 91. Well, she gapped up twice recently. Currently at 91, so I could buy it at 92. The 92s are going for 169. That's over 1.5%. Well, that makes sense to me. How are you able to bring up the seasonality chart? Charles, give me a second. I'm going to show it to you in a minute. Okay, let's finish looking at Win. A year ago, we're at 90. Okay, shoots up to 110 as the high of the year. Then she drops down. It's 72 for the bottom. So let's zoom into this area right here because this is where we are now. Austin, what's up? Roberta, hello there. How are you doing? Well, how are you doing? All right, so here's our bottom right here. Okay, the beginning of August. So the beginning of August is our bottom of the year, and that is 71.63. She goes up a little bit, goes sideways for a couple of months, shoots up. She gaps up on Tuesday, gaps up on Thursday. What's up for tomorrow? Well, you're going to have pullback one of these days because you can't go from 80 up to 91 without some kind of profit taking. It's going to happen. Just where are you going to be when it happens? Now, Charles. Okay, how am I able to bring up the seasonality chart? Well, if you are on Thinkorswim, okay? If you're on Thinkorswim, this little button right here, it says Style. Okay, just above the screen, say Style. You click on the Style button, a drop down pops up. The fourth one down, it says Chart Mode. Okay, so I click on that one, and then another window pops up. See that? Another window popped up. Standard monkey bars, seasonality. Okay, click on seasonality. Here you go. Now let's take a quick look. This is what the seasonality chart looks like for Wynn Resorts. Okay, the red line is 10 years worth of data. The blue line is this year. This blue dot is today. Do you trade options? Donald, yes I do. I love options. So here's the blue dot. Look what we're looking at for the next couple of weeks. Okay, a nice downturn every single year. All the way down. Here's our bottom in the month of October. Then November, December, she pulls back up. Well, I would love to get out of Wynn this November, December. Okay, but here's where we are now. So the next couple of weeks, this is what we can expect. It's not guaranteed, it's just what it normally does year after year. What does Wynn Resorts do? Well, they provide hotel accommodations for people. So we're going to dip a little bit, jump up, go back down again. Didn't really help us out very much now, did it? Okay, here we are. Last 30 days. So here's a question you need to ask yourself. 30 days ago, we're at 78. Okay, we bottomed out at 74. Okay, went sideways for a couple of weeks, jumped up, went sideways, and then she shot up this past week. Okay, do you think it's going to sustain that and continue going up, or do you think there's going to be profit taking? More than likely, there's going to be profit taking. It's just where are you going to be when that happens? Young man, we looked at IEP. Michael Robinson, what's happening? Did you research and put your dividend dates on your calendar manually? Stifler's mom. Some of them I did. Most of them it was cut and paste from spreadsheet that I downloaded from Google. You know, Dividend Kings List 2024, Dividend Achievers List 2024, Dividend Aristocrats List 2024, so on and so forth. Riley discontinued their dividend. Did they really? Uh-oh. R-I-L-Y. May, August. Oh, they didn't pay the August. Do you see that? March, May, August, November. March, May, August, November. March, May, there's no August. That's not good. Oh, that's not good at all. I actually have some Riley. Now, I bought it under, I bought it for someone else. Let's put it that way. Didn't buy it myself. Covered calls on Intel. We'll get to that in a second, Harry. Hold on a bit. Do you like a long-dated treasuries? No, I do not, Donald. Okay? I don't. I need weekly cash flow. Weekly cash flow. If you have a treasury that will pay me 1 or 2% every single week, I get no problem taking a look at it. If not, I'm going to stick to, you know, I come from a time frame. Okay? I was born in the 60s, so I grew up in the 60s, 70s, and 80s. Things were simple back then. People did what they said they were going to do. Okay, if we say we're going to show up, we showed up. If it ain't broke, here we go. You ready? If it ain't broke, don't fix it. So if I'm consistently getting 1% every single week doing what I am doing, you're suggesting me to take a look at something that's not beating, not making more than what I'm currently doing. So why would I look at it? If you have a bond that you know has consistently paid 50% or more, I will gladly take a look at it. If not, I have no desire to waste my time looking at anything that doesn't do as good as what I am currently doing. It just doesn't make sense to me. All right, Michael David Robinson, 3J6 Davis Field Airport, very southwest Georgia in the time. Enjoy, okay, cool. Right, don't slice bread along the way. Okay. Enjoying the storm watering the grass. Okay, Harry, Intel. I love Intel. Believe it or not, we're at the tail end. Okay, so I'm in St. Petersburg. As far as I know, that the storm had gone a little bit past. What do you think about Forex trading? Breeze, it's a young man's game, in my humble opinion. The reason why I say it's a young man's game because you can sit there and stare at the computer all day long. Yeah, no thanks. Okay, you know, the Forex, you can actually trade 24 hours a day. Yeah, no thanks. Your thoughts on ETH? Isn't that Ethereum? Isn't that cryptocurrency? Yeah, it's a no. Sorry. Harry, I don't do straddles. Sorry. Here, right here, Harry. One trading strategy only. My daughter was 9 years old. She jumped up in my lap at 9 years old and said, "Daddy, please teach me what you're doing." I said, "Great." So I taught her. You know, for a 9-year-old, it had to be a strategy that she could comprehend. Simple, safe, predictable, consistent, and no way that she could lose. That's, if you think about it, that's a great idea. Simple, safe, predictable, consistent, and no way to lose. What is wrong with that? Well, 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company is consistently profitable. This is one people have a tendency to just overlook. Okay, not me. I want to make sure my money is safe. I don't want to put it in a company that's wishy-washy. All right, I don't like ETFs. They're wishy-washy. I'm not giving my money to a computer to have it do it for me. No, thank you. Okay, now, rule number 4, make sure there are weekly options. Okay, the title of the show is called Dividends for Weekly Cash Flow. Dividend Stock Talk. Weekly cash flow. If I can't get weekly cash flow safely, predictably, and consistently, I don't want to look at it. I have too many other things going on in my life that I would like to do. That being said, well, I took a bath on Neo. Well, I can't help you out with that one. Okay? Neo was not on my list. All right? So, where are we now? ETH is a no. Okay, Harry, only one trading strategy. I buy a good quality dividend stock, I sell a covered call against it. That is it. It is simple, it is safe, it is predictable, it is consistent, and if you do it right, there's no way you can lose. That is the trading strategy. Scott, you want to take a look at Kinder Morgan. How much money is it good to start with? Okay, the Breeze, I can't tell you that. Okay, I started out with 12,000 back 20 years ago. My grandson, he started out with 50 bucks, but he's only 4 years old. He didn't really do it. You know, me, the mother, me, mom, grandparents, we all pitched in, and we put in a little bit every week, and it slowly grows. So when he turns about 18, he should have a decent amount to play with. So Scott, Kinder Morgan. Kinder Morgan is a dividend king. That means they've been in business for over 100 years, and they have 5 decades of increased dividends. That means every single year, higher and higher and higher dividends. I love Kinder Morgan. KMI. Okay, however, Kinder Morgan's going to be a no. What do you think of Tesla? I have some shares. All right, the Breeze, I don't like Tesla. The reason I don't like Tesla, they don't have dividends. They don't share the profits. Wells Fargo, awesome company, dividend king, in business over 100 years. We'll write it down. Maybe we'll get to it. Wells Fargo, WFC. Okay, Kinder Morgan, high, low, where was it? Where is it? What direction is it going? Look at that direction. Moving nicely. But it's currently at the high of the year. Sorry, I don't like it the high of the year. I will take a look at it in about 2 or 3 weeks. But before we do, 2171, the 22 is going for 9 cents. Yeah, no. The money's not there. Okay, Mark, we already looked at it. When? Darbenley. If you zoom out, will American Express would still appear as if it's touching a high of the year? Okay. Okay, here's American Express. The high of the year was Monday. Okay, it's not enough of a pullback. Okay, so it's still up in this area. Sorry, dude, it's just no. Scott, Kinder Morgan. Wait, we were looking at Kinder Morgan. Yeah, KMI, Kinder Morgan. The numbers just don't look right, and she's too close to the high. Look, 2168, 2170. The 22s are going for 9 cents, and the 2150s are going for 20. So it's not enough money. The numbers just don't work. WBS. What the heck is WBS? Andrea, how are you? WBS. WBS. What the heck is WBS? Webster. Oh, come on, Andrea. You know that WBS is monthly. We don't do monthlies. You know that. I did pretty good with DoCU. What the heck is DoCU? D-O-C-U. DocuSign. Now, for some strange reason, I don't think DocuSign has 20 years of increased dividends. D-O-C-U. Oh, that's right. D-O-C-U. There are no dividends at this time period. Okay, I don't like those. Now, the reason, don't get me wrong, it might be a great company. It really might. But how am I going to tell whether or not if it's consistently profitable? I'm going to have to read all the quarterly reports, all the annual reports, all that stuff. Okay, and they don't share their profits. What do I get when it's not if? Okay, it's not if. Look, went up, it went down, up, down, up, down, up, down, up, down, up, down. Now it's up. It's most likely going to come back down again. So if a stock comes down, what am I going to get? Okay, I get nothing when the stock goes down on a company that doesn't share their dividends. So why the heck would I be looking at it? Enterprise was 50 and dropped to 13 under scrutiny of a Ponzi scheme. Okay, Andrea, I would need to have the ticker symbol. Greg, what is your take on Pfizer, PFE? Pfizer, high, low, where was it a year ago, where is it now, and what current direction? Well, look, the beginning of the year, she went down, turned around, now she's going to the upside. Okay, currently we're at 28.97, all right? Now, 28.97 was their last traded price. The bid, 28.92, the ask, 28.94. What that usually means, okay, what that usually means when both the bid and the ask are lower than the close of the day, the market maker is going to push it down. Sorry, he's going to push it down. Well, currently, right now, here's where we are. Okay, let's zoom in and see if it is a good time to buy. But usually, now this is not 100% guaranteed, but when these two are both higher than the last price, the market maker is pushing it up. When they're both lower, the market maker is going to push it down. It's just one of those observations you make over the years. All right, so a year ago, Pfizer's at 32.70. The top of the year was 34.13. We bottomed out. That a quadruple bottom in April. Take a look at that in April. A quadruple bottom. 4. That's what you call support. When it doesn't want to go any lower than a certain price, that's support. And it's usually 2, 3, 4 or more times at that certain price. We have 4 times in April. It wouldn't go below 25. All right, so 90-day top. 31.54, the last 30 days. Now, the reason why I like the last 30 days, it gives me a better idea of what the next 5 or 10 days is going to be. Because this week is going to look very similar to last week. What did last week look like? Look, a little bit down. Okay, this week, a little bit down. All right, so 30 days ago, we're at 28.80. We bottomed out at 28.20. Okay, shoot all the way up to $30.40. Pull back, we're still pulling back. So Pfizer, me personally, I would wait a little bit longer to find the bottom on Pfizer, because right now, your 30-day high was last week. Okay, so you get a 30-day high, what happens? Well, usually, people start taking profits. Because remember, it's not a profit until you take it. And nobody ever went broke taking profits. Donald, you want to take a look at Ford and General Motors? Now, just to let you know, I do have some Ford, but I don't have any General Motors this week. Okay? So, that being said, 30-day high, 1, 2, 3, 4, 5 days to the downside. Now, today was an update because she gapped down today. Now she's up here. Well, is that the bottom and she turning up? Well, if it is, I want to take a look at it. So I'm going to put Pfizer for next week to take a gander at it. PFE, Pfizer. Okay. Funky Cold, 250K, where should I put it? Block party, let's get some pizza. I'm sure we can hire someone and help you spend that 250. Shouldn't be that bad. All right, books or courses you recommend. One book I really liked was Wade Cook's Wall Street Money Machine. Hey y'all, it's Meemaw. Meemaw, how are you this evening? Okay, you're entertained? Wonderful, glad I can help you out. Amy wants to take a look at Exxon Mobile. X-O-M, Exxon Mobile. Interesting. Always, first thing I want to see, high, low, where was it, where is it, what direction is it going? It's going sideways. Had a big dip yesterday and today. We want to take a closer look at that, but before we waste our time looking at that, what do the numbers look like? Well, currently at 113. The 113 is 145. Well, that's over 1%. That's what I like. That's what I'm looking for. So, Exxon Mobile, a year ago, 116.01. The bottom was in the end of January of this year, and that was 95.52. Our top in the middle of April at 124 drops down, and she's been channeling for the last couple of months. Look at this. Doesn't that look gorgeous? Look. Down, up, down, up, down, up, down, up, down, up. Now it's coming down. So what does that mean? Well, for me, last 30 days. Here we go. Last 30 days. Okay? 30-day high was 30 days ago. Okay, 2 weeks ago was the 30-day bottom. Shoots back up close to the 30-day top. The 30-day top is at 119.50. Well, our current top is at 118.20. And then she drops down for 3 days. Okay, today, yesterday, and the day before, 3 days to the downside. So I'll be looking for this thing for next week or the week after down the 108, 109 area. I like Exxon Mobil. It's been around for a while. Ain't going anywhere. So I'm going to write Exxon Mobil for next week. It's already written down for next week. So we already looked at it. Absolutely. No, thank you. Okay, Lucero. I have no idea what you're talking about. Intel. We already looked at Intel. We looked at Intel already. Grab. What the heck is Grab? G-R-A-B. Grab Holdings. Yeah, that's going to be a no. Sorry, dude. DEO. That's going to be a no also. Oh, imagine that. China. Another no. Yeah, nothing even there. Take on UL. United Laboratories. Yeah, that's a no. All right, dude, you're just spitting out crap, really? Okay, Shaq, we already looked at Humana. Prologis, yeah, that's going to be a no, too. We skipped Walgreens. Jerry, we didn't skip it. We just haven't gotten to it yet. WBA. Now, we did notice that Walgreens made a new 30-day bottom yesterday. Prayer Kid. So what exactly is your strategy, if you don't mind me asking? Well, Prayer Kid, you're new here. I don't mind at all. This is why I'm here. People ask me questions. I give you honest answers. What I am doing here, Prayer Kid, I came up with a trading strategy for my 9-year-old daughter back in 2008. Here's what you needed. It needed to be simple, safe, predictable, consistent, and no way to lose. Great. 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable with weekly options, and then make sure the numbers work. What are the numbers? Well, we already went over that. What can I buy it for? What strike price can I sell? What kind of premium am I collecting? Is that 1% or higher? Great. If it is, what is the chart telling me? I don't buy it at the high. I'm not looking to go higher. I don't buy it at the low because you don't know how far it's going to go. Certain things I'm looking for when I look at the chart. I want the bottom, I want it to turn around, and I want it to start going up. That's what I want. So my trading strategy, you could call it dividend capturing 2.0. We're taking dividend capturing, and we're taking covered calls, which is stock options. So we buy the stock, we sell a stock option against it, and we put covered calls and dividend capturing together, and we call it dividend capturing 2.0. Okay? Walgreens. Here we are. High, low, where was it? Where is it? What direction is it going? Okay. Uh-oh, this is the wrong one. Hi, I'm from India. My question is, can I do trade in the Forex market with hedging? Please explain my question. Well, first of all, you're in the wrong place. I don't want to make you feel bad by telling you you're in the wrong place because everybody's welcome here. However, I don't do Forex. So what I'm teaching here is going to be totally useless in the Forex market. Okay, I want to tell you that now so you're not sitting here wasting your time looking for some kind of tidbits to help you out in your Forex trading. I don't do Forex. What I'm trading here, what I'm teaching here ain't going to help you. Are there any books or courses you recommend? We already talked about that. So let's finish up with Walgreens. A year ago, 21.20, topped out at 26.92. The bottom was yesterday. Now, funny thing, I'm not quite sure how funny it is, but here's the thing. A couple of months ago, we thought this was a 30-day bottom. And then we thought this was a 30-day bottom. And then we thought this was a 30-day bottom. Well, now this is the new 30-day bottom. Okay, one spin, yeah, Qs, I don't do the Qs at all. Anything with Qs in it is going to be a no. Really, really, really asking you to double check the numbers. Not just what you're buying it for, not what they're paying you out. How consistently are they with their dividends that they're paying you? Because they give you a profit. BOO every week, DCA into it and buy, you'll see stress-free life, make money. Oh, hell no, you won't. Just for that, we're going to take a look at VOO, and I'm going to show you how wrong you actually are. VOO is one of the biggest turds that's trying to sell you. Okay? So hold tight, and I'll show you. In my humble opinion, of course. Because I have been wrong once or twice, and I have no problem admitting when I am wrong. But numbers don't lie. We're going to take a look at VOO, and you're going to say to yourself, what the hell was I thinking putting my money into this piece of crap? So let's take a look. So anyway, with WBA, I do own Walgreens in a couple of accounts. I have no intention whatsoever selling it. I will dollar cost average probably this week coming up because I'm into it at 12. Right now, she's at 8.50. All right, we'll take a look. So I haven't done VOO in a while. Now, I do VOO almost every single week because there's always people saying, VOO is so wonderful, so great, so awesome. Yeah, right, tell me about it. Currently, it's at the high of the year, 527. Okay, fine. The 527s are going for 265. That's a 0.5%. Why the hell would I want to do a 0.5%? Think about it. 0.5% every week comes to 24% per year. Oh, no, 26% per year, sorry. Okay, so why would I do this and get a 0.5%? Yeah, no thank you. But wait, it gets worse. It does, really. Hold on. I'm not going to say trust me because you don't know me. Okay? I tell people, don't believe a word I say. Do your own research. Okay? Do your own research. And when you do, you'll be asking yourself, what the hell was I thinking putting my money into this? So currently, you can argue if you want. I really don't care if you agree with me. But VOO at this current moment in time is $527.70 a share. Okay, it is what it is. Now, let's take a look at how many dividends and how consistently they increase those dividends. Because remember, a dividend is a portion of the profits the company gives back to the investors. So, if the company is consistently profitable year after year after year after year, wouldn't logic, reason, and common sense tell you that the dividend should increase every single year? So what happens if the dividend doesn't increase? Well, does that mean they weren't as profitable as they were last year? Well, yeah, that's exactly what it means. If 1% or 5% or 10% of all the money they bring in goes to pay the dividends to the shareholders, if that decreases, well, they're not as profitable. That's as simple as that. If the money you're sharing decreases month after month or year after year, well, you're not making as much money as you did last year. Plain and simple. If you're consistently profitable, the dividends should go higher and higher and higher and higher. Let's take a look at the dividends for VOO. Someone seems to think VOO is great. I disagree. All right, 2010 is when they first started paying dividends. Well, let's take a look. First dividend, 56. Second dividend, 53. Well, didn't that go backwards? Because going higher means going higher, not lower. All right, anyway. 56, 53, 54, 57, 58, 69. 57, backwards. 69, 64, 69, 94. 67 backwards. 74, 79, 91, 78 backwards. 81, 88, 98, 90, 95, 109, 101, 95 backwards. 88 backwards. 130, 1 backwards. 101, 118, 108 backwards. 116, 121, 129, 146, 139 backwards. 130 backwards. 141, 143, 118 backwards. 143, 131 backwards. 138, 126 backwards. That's all it does. It goes up, it goes down, up, down, up, down, up, down. No consistency whatsoever. If I'm retired, I need a safe, predictable, consistent source of income. Now, if they're consistently going up and down, and they're not consistently profitable, why the hell would I put my money there? But wait, it gets worse. It does. Let's go over to the summary. Okay, the summary. All right, still $527.70. Okay, here's the current chart, blah, blah, blah. Now, you got your PE ratio, then you have your yield. Do you understand what the yield is? If I take my money and I put it here, and then I get a rate of return, that is the yield. That's what I am yielding from my investment. Well, VOO is currently at 1.28% for the year. Not the month, not the week, not the quarter, a year. If you put $100,000 into this here, okay, you're getting 1.28%. So on $100,000, you're getting $1,200. That's it for the year. I'm showing you a strategy which I've been using for the past 15 years that gets a safe, predictable, consistent 1% per week. That's over 52% per year. And that's at simple interest. Mike, oh, you're way over here. Coach Joel, what's happening? So why would you think? And you need to explain it to me in a manner in which I would understand, because I don't. I don't understand why you think that 1.28% per year is a good investment. Okay? They have what's called the rule of 72, which tells you how long it's going to take for you to double your money. Well, how long do you think it's going to take to double your money at 1.28%? You can do whatever you want, brother. Really, you can. You can call me whatever you like. But I didn't go to college, and I have no problem admitting that. I have no college debt. But I do know that 52% a year is a hell of a lot better than 1.28. Okay, you're right. What stocks get you 52%? Donald, are you ready? All right. Oh, Donald, you ask, I deliver. You ready? Here we go. Nordstrom's, Halliburton, Newmont, Bank of America, General Motors, Kimberly-Clark, Pepsi, Macy's, Coca-Cola, Waste Management, T. Rowe Price, Devon Energy, Albemarle, VFC, Occidental Petroleum, MPW, AIG, Altria, PHM, Pulte Group, Best Buy, General Motors, MDT, Medtronics, Nucor, JP Morgan, Bristol Myers Squibb, American Express, Cisco, Comcast, Cardinal Health, USB, Mendelez, Fifth Third Bank, John Deere, and Seagate. That's just for this month, and that's only one list. I got like 7 or 8 lists. The only stocks I look at are companies that have consistently increased their dividends every single year. Not once in a while, not once every 4 or 5 years. Okay, no pullback whatsoever. As a matter of fact, let's take a look at a few, just for the fun of it. Okay, this is one you all know. Let's go here. Microsoft. I want to go to historical data. Okay, historical data. Okay, I want to take a look at dividends only. And then I want to go to maximum amount of dividends. How long have they been doing that? Donald, VOO is up 33% this year. really don't give a rat's ass. Really don't. VOO pays 1 point something percent per year. That's number one. It's up 33%. We are in week number 39. Week 39 for the year. That's less than 1% a week. Now, I'm up over 70% in one account, up over 50% in another, and whatever. But anyway, take a look. This is what I like to say. Go all the way back to the beginning, 2003. Okay, 8 cents, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently going up. Now the next one I want to show you, I'm not going all the way back to the beginning. The reason why I'm not going all the way back to the beginning, because this company here, GPC, has increased its dividends for 7 decades. That's longer than I've been alive. Look, 31, 34, 37, 39, 40, 41, 45, 50, 54, 58, 62, 66, 68, 72, 76, 82, 90, 95, $1. Consistently going up. No pullback. Consistently, year after year after year. Now, you get the Dividend Kings, 54 companies that have increased their dividends every single year for more than 5 decades. Okay, those are the Dividend Kings. Second list, Dividend Aristocrats. 67 companies that have increased their dividends for more than 25 years. Dividend Champions, 150 companies that have increased their dividends for 25 consecutive years. And then you have the Dividend Contenders, 300 companies that have consistently increased their dividends between 10 years and 24 years. Okay, and then I like to throw in Warren Buffett's list because, you know, he's a good trader. I take Warren Buffett's list 2024 and I buy his also. Those are the ones I look at. I buy them just before the dividend date. I sell a covered call against them. I grab a 1% premium, and that 1% premium comes to over 50% per year. Granted, it's at 5 or 10, 15, 20 minutes tops every day. Once you learn how to do it, it's relatively easy. You take a look at the stock that's coming up for the week. September, we are into the end of September. So let's take a look. John Deere, Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan. Well, those ones are all up on the list for next week. Okay, so what do they look like? Well, simple. Let's take a quick look. Okay, CMCSA, Comcast. We all know who Comcast is. Okay, high, low, where was it? Where is it? What direction is it going? 41.30. The 41s are going for 31 to 40 to 52. That's over 1%. Okay. Uh-oh, I missed one. I missed a question. When was the last time? Oh, John, thank you for that. We skipped Walgreens. No, we didn't. Oh, so that's Comcast. Okay, I think it incorporated in 1964. They had over 65 million customers that paid them every month. So currently at the 41, the 41s don't really look that good. They're 31 to 52. You could get you 1% of that one. Next one, we would take a look at General Electric. Same thing. General Electric's going to be a no because it's at the high of the year. I don't like buying at the high of the year. So what else did we have? MDT and Nucor. MDT, Medtronics. Okay. High, low, where was it? Where is it? What direction is it going? 89, 88, the 90s are going for 31. Yep, that's going to be a no. See how quick that was? Why would I waste my time if the numbers don't work? Okay, I'm doing a covered call. A covered call is one of the safest strategies there is. So MDT didn't look good. Okay, well, what about John Deere? DE. Okay. High, low, where was it? Where is it? What direction is it currently going? Okay, at the 416, I'll be looking at the 415s, 220, 277. No, numbers just don't work. Deuces. LRCX. I can tell you no now. LRCX. Okay, LRCX, $847 a share. Really? Okay, here's your high, here's your low, here's where it was, here's where it is. Okay, she went up, now she's pulling back, turned around. This is where we are now. Okay, the 850, the 850s are going for $22 a share. Well, that makes me a little bit curious. Just a little bit. I want to see how often have they increased their dividends. What was it? LRCX. LRCX. Okay, so LRCX only has 10 years of dividends. Yeah, I like 20 years. Okay, 10 years ago, went from 18 to 30, 45 to 50 to 110 to 115 to 130, 150, 173, $2 to 230. Well, yeah, the dividends are going up, but it's only 10 years of dividends. If you like it, more power to you. I like 20 years. Now, you may say, well, isn't that unrealistic? No, because there's 9,660 some odd different stocks I can pick from on a daily basis. 9,600 different companies to choose from. Well, how do you choose? Me, it's very simple. 20 years of increased dividends and weekly option. Just those two criteria. Just those two. Well, it tells me it's consistently profitable. That's number one. I like that. Dogs of the Dow, great strategy. I don't teach it here, though. Sorry. I like consistency with increases in the payments to the shareholders. I'm retired. I do not have the time, desire, nor the inclination to take a bunch of my money, put it into a company, and wait for it to increase. Sorry, I need cash flow. I have no desire to go back to work. I've been working since 1973. Okay, and I'm not talking about sitting at a desk punching in numbers on a clock. No, no, no. I've done construction. I've done masonry. I've done yard work, landscaping. I've done a whole bunch of shit. I even had a manufacturing company. I actually was a CEO at some point. Do I sell puts? Yes, I do, but not here. This trading strategy here is only one trading strategy. Only one. It's called a stepping stone strategy. It's simple, it's safe, it's predictable, it's consistent. If you do it right, there's no way you can lose. Okay? Now, once you perfect this simple strategy, buy a good company, make sure they're consistently profitable, weekly options, well, you have weekly cash flow. I'm late, please explain. Well, what do you need me to explain? Kraft, ooh, I like Kraft. Unfortunately, Kraft is a dividend king. They've been in business for over 100 years. They have increased their dividends for more than 5 decades. Okay. However, the premiums really aren't that great. All right, Yuzi, you want me to explain the strategy? All right, you ready? Here we go. Buy a good quality dividend stock that has consistently increased its dividends for more than 20 consecutive years and has weekly options. Buy it 2 weeks before the EX date. At the money, sell a covered call as close as you possibly can to what you paid for it. Make sure the premium you collect is 1% or more. I think that's about it. All right, Valireth. You want to take a look at Kraft, KHC. Okay, KHC. Here's our high, here's our low, here's where it was, here's where it is. What direction is it going? Well, it's pretty easy. Up, down, up, down, up. Now she's going to the downside. She had 34.85 to 35, so going for 27 cents. I've never seen Kraft have a decent premium. It's Kraft, Coca-Cola, Johnson & Johnson. There's a few of them. I need that written down. Eddie, can you run through that again? Great strategy. Okay, Eddie and Anderson, are you ready for this? Top left corner. See it? Top left corner. It says dividend investing for weekly cash flow. Cache Wilder. Okay, now, I know you might find it a little challenging, so here we go. Are you ready for this? Now, what I need you to do if you're really interested. Top left corner where it says dividend investing for weekly cash flow. Come up there, hit on that. That will bring you to the link in the bio. Link in the bio, and that will take you to here, the 10-minute trader. Okay, the 10minutetrader.com. Do a little bit of research. You'll see the 10minutetrader.com has been around for over 20 years. Right here it says live trading. You click on that. I actually have a live trading group. Now, read along with me. Okay. Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern Standard Time. Underneath that, about us. If you're looking to strike it rich overnight, this ain't it. My main focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. You see this chart right here? This little video.
Good afternoon, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, using nothing but pre-qualified dividend stocks, and those are companies that have increased their payments to the shareholders for a minute.
Okay, all the information is there. If you don't like that, scroll down a little bit lower. Look what it says. Investing your money shouldn't be difficult. Stop making it more complicated than it needs to be. Right here, learn more about this simple trading strategy. It is a simple PDF. Okay, it's 3 pages. Gives you the trading strategy. Simple. Okay, underneath that, morning trading group. Then underneath that are all the trades I've made so far for this year. If you want to view all of them, here you go. And lo and behold, here's all my trades for this year. Okay, goes all the way back to January 2nd. There was no trading on January 1st. January 2nd, here we go. Look, CVS, General Motors, LUV, Southwest Airlines, Comcast, and Ford. Okay, very next week. Week number 2. Lowe's, Comcast, Ford, General Motors. Week number 3, General Motors, Comcast, Wells Fargo, Morgan Stanley, and Ford. All my trades are listed. Okay, even the profits, well, most of the profits are listed. Okay, so first week, I made $2,400, 2.12%. Over here, I made $2,900, 2.9%. All the numbers are here. I don't hide anything. Okay, so in count number 1, let's go all the way back to the top, because we are currently just finishing up week number 39. Okay, so as of this moment in time, this account's up 46, this account's up 69, this account's up 10. Well, this account's only 2 months old, so that's like 5% a month. Okay, give me a break. It's a new account. But all the numbers are there. I'm not hiding anything. That being said, KHC, the numbers, they're just not working. 34.85 to 35 is going to be the closest, and that's only 25 to 27 cents. So it's not going to be enough money to make me a happy camper. Okay, I like 1%. 1% of a $34 stock is 34 cents. Why purchase 2 weeks before the EX date? Now that's an interesting question. I don't get it that often, but I get it about once a month. Why buy 2 weeks before the EX date? Now, the calendar you're looking at is the calendar for September 2024. We are currently the 26th right here. Okay, so let's go to next month, October. Now you'll see October is not completely full because this is like 3 or 4 weeks away. This is next week, this is the week after, so on and so forth. And they slowly fill as they announce. Because when you're looking at these little dots, what do they represent? 4 dates. Date number 1, the announcement date. That's where the company says, hey, hello, investors. This is me. This is the company. This is the dividend. This is when we're paying. The announcement date. Simple. Date number 2, the EX dividend date. That is the last day the stock trades before the dividend is paid out. Okay, those are those little green dots. The EX dividend dates. Okay, date number 3, the date of record. whoever owns the stock on the date of record is entitled to the dividend. Now, I'm going to get to why we buy it 2 weeks before in a second. Hold on. Date number 4, the payment date. Self-explanatory when you get your check, so to speak. Now, why do I buy 2 weeks before the EX date? Well, here you go. Stocks, especially the ones that I look at, have a tendency to go up in price 2 weeks before the EX date. So, if I like General Electric, here's General Electric. It has the dividend date today. If I want to collect the dividend on General Electric, means I would have to have bought it yesterday, the day before, the 11th, the 4th, the 2nd, the 20th, but not the 27th, because that's after. Any day before the 26th in order to qualify to get the dividend. However, I like to buy it 2 weeks before this date. 2 weeks on a Monday. Alrighty? So, for the fun of it, today's the 26th, 2 weeks on a Monday. Let's take a look at the chart for General Electric and see if I'm right. Okay, back to the chart. Uh-oh. How about we go back here and we do this. Chart, General Electric, GE. Now, we did say the 9th, correct? Where was the calendar? Okay, 26th, 2 weeks prior, on a Monday, the 9th of September. All right, so let's go back to the chart. Okay, 9th of September. See these dates right up here? Okay, wherever I put my... Tonight has been exceptionally educational for this beginner. Thank you for your efforts. James, you're welcome. See, when I move the cursor, see I'm moving the cursor? See these numbers up here? Okay, here's the date, the opening of the day, the high of the day, low of the day, close of the day, and the range. How much has the stock moved between the high and the low, so on and so forth. So, if I have my cursor right here, the date is 9/9/24. The opening price, 163.49. Well, it doesn't take a brain surgeon to figure out. If this was the 9th, look what it did. What did it do? It went up in value. When is the dividend? Well, the dividend was today. See it right there? 2 weeks prior on a Monday. That's why I like to buy 2 weeks before the EX date on a Monday. The reason why I buy it on a Monday is I like covered calls. Covered calls usually give me a higher rate of return than the dividends themselves. So let's go back to Market Watch. The dividend is 28 cents. See it? 28 cents. What is the stock price? Well, currently the stock price is 184. So we get my trusty calculator. 28 cents. Clear. 28 cents. And we're going to divide that by the purchase price. Purchase price, 184.59. Divided by 184.59. That gives me a grand total of 0.15%. That's the dividend. 0.15%. That's horrible in my humble opinion. But here's the thing. If I buy it at 185.22 and I sell the closest strike price, the 185, well, I'm collecting $2.67. So what am I doing? I'm buying it at a certain price and I'm selling it for almost the exact same price. Okay, 185.22, the 185's 267. That's more than 1%. Why would I take the dividend when I can get the premium? And the premium is higher than the dividend. I could even go a couple of strikes in the money. So if I buy the 180s, I can sell the 185s, I can sell the 180s and collect 545. Well, that's over 1% also. I'm looking for a safe, predictable, consistent 1% per week. I could collect the dividends, but I get more money by doing a covered call. So if, whoops, if, okay, if the stock goes up in value 2 weeks before on Monday, if I buy it at the money and the market opens and then I sell a covered call immediately, so the market opens at 9:30. So if I buy the stock at 9:30 and sell the covered call at 9:31 or 9:30 and 15 seconds or 9:30 and 20, whatever, you know what I mean. Buy it, sell it at the exact same time. Well, I'm getting 5 days of time value. Okay, remember buying it on the 9th, Monday, Tuesday, Wednesday, Thursday, Friday. Time value is a huge portion of the option. Now, 80% of all options expire worthless. So if I put odds and probabilities in my favor, odds and probabilities, you ready? Well, there's a dividend coming up in 2 weeks. Okay? Okay, if I'm buying it on a Monday, dividend coming up in 2 weeks. Okay? They've been in business for over 100 years. They've consistently increased their dividends to their shareholders every single year. Okay? Dividend coming up, consistently increasing their dividends. I'm getting more than 1%. Okay, and this is this week here. Now, if I buy it at the money, at the market price first thing Monday morning, I sell at strike price the exact same amount of money I paid for it. I buy it for $1, I sell it for $1, I collect 1%. Okay, if the stock is above my price on the end of business on Friday, well, I get all my cash back and I can do it again on the 16th with a different company. Because there's over 9,600 different companies trading every single day, I should be able to find one. Now, I have over 300 that I keep an eye on, but I don't trade all 300, and I don't look at all 300. Okay, so this is what I'm looking at. Okay, for next week, these are the only ones I'm going to look at. I'm not going to look at anything else. 9,660 some odd companies. That's a lot. But I'm only looking at AIG, HCA, Hess, MO, MRK, UNH. I'm just looking at these 5, 7, 8 stocks. That's it. I'm just looking at these 8. Whichever one works best for me, gives me my 1%, then I'm going to buy it. Now, I don't check whether or not it's a good company because I've already done that. Once I've selected a company, it goes into my calendar and I will look at the exact same company every 90 days because these companies pay a dividend every 90 days. And the funny thing is, let's go back to January. Okay. Here's the list for January. Are you ready? This is one list, January. Look at, you got all these this week, this week, this week, this week, this week. Look at them all. That's January. Now there's 3 months in a quarter. January, February, March, first quarter. Okay, look at closely at the stocks. Comcast, GPS, Cisco, American Express, Bristol Myers Squibb, JP Morgan, Marvel, NTAP, and Cisco. The first week of the first quarter. Okay, April, May, June. Second quarter. So let's go to April. Give it a second. Come on. Okay. Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan, NTAP, Cisco. Look at Cisco twice. CSCO, Cisco. SYY, Cisco. Same companies. April 1st. Okay, April, May, June, second quarter. July, August, September, third quarter. So let's take a look. July, okay, July 2024. Oh, look at this. Comcast, American Express, Bristol Myers Squibb, Cisco, NTAP, JP Morgan. Exact same companies. Okay, but wait. Okay, October. October, first week of the fourth quarter. Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan, Cisco, NTAP. Exact same companies. I'm looking at the exact same companies quarter after quarter after quarter. Now, 12 weeks in a year, 4 quarters. 4 quarters, each quarter has 13 weeks. That's it, 13 weeks. That's 52 weeks in a year. Divide that by 4, 13 weeks. Week 1, week 2, week 3. Here you go. Week 1, week 2, week 3, week 4, week 5, so on and so forth, all the way to week 13. So we are currently in week number 13 for the third quarter. Tomorrow, next week, starts week 1 of the fourth quarter. And what do we have coming up? Well, we have Cisco, Comcast, American Express, Bristol Myers Squibb, JP Morgan, NTAP, and Cisco. Okay, week 2. Bank Mellon, Gap, American Express, Delta Airlines, Oracle, Verizon, and Marvel. That's just this one list. I've got like 7 or 8 lists. Dividend Kings, Dividend Aristocrats, Dividend Champions, blah, 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 blah. But all my stocks are listed. Every trade I've made since the beginning of the year is listed on my website. All right, let's keep on moving forward. VTS. What the heck is VTS? Why ask why? VTS. There's a reason why ask why. VTS. Okay, no. Sorry, that's a no. Monthly optionable stocks just don't work. Now, I'm sorry if you are getting a little offended by your pick, VTS, it's going to be a no. Why? Well, monthly optionable stocks, you can only do it once a month. Well, once a month means that's 12 times a year. Okay, so what am I getting as an option premium? Well, let's take a look. Currently, VTS is at 23.27. Well, the next option is right here. 23.27. I'm looking at this one. Can't really tell because it's 0 to 135. But even at 135, the 25 is going from 5 cents to 15 cents. Well, no thank you. Okay, and then I'm doing it for 21 days, which is 4 weeks, or 4 Fridays. Actually, it's 3 weeks and 1 day, but 3 weeks and 1 day is 4 weeks. Okay, so you got to divide that out by 4, and the numbers just don't work. But what's worse? Okay, here's the last 30 days. Okay, the last 30 days. Drops, retraced, is our high. Drops, retrace, drops, retrace, drops. Here's our bottom right there. Okay, great. Now, if you counted, okay, 4, 9, 14, 18, 23. So there's usually about 22 trading days in a month in a 30-day period, 22 trading days. So if I'm going to do a monthly, well, here's it now. Here's where we are now. Where is it going to be in 4 weeks? Well, that's 22 days. Well, look what it did this 22 days. Down, up, down, up, down, up, down. Great. Now tell me where this is going to be. I can get a good idea where I think it's going to be in 5 days by next Friday. Well, look. Down, up, down. Well, it's going to continue to go down until it finds its bottom. Once it finds its bottom, I'll ride it back up again. That's like a week or 2. 4 weeks, yeah, no. I don't like monthlies. They just don't work. And I don't know why you guys keep suggesting stocks that pay monthly. The numbers just don't work for me. Okay? Thanks, Eddie. Gary, how are you? CB, dividend stocks, how much capital do you need to profitably start the strategy? Now, CB, it's going to be different for everyone. Okay, the amount of money that I have gives me 1% a week. That satisfies my bills. My bills aren't that high. My kids have moved out. I am divorced. I am a single man. Okay, I'm living with a young lady. We share on the bills, but I have enough saved up so that I don't have to go back to work. That's what I hope for you guys to get. Now, at some point in time, you're going to retire. You're going to take all the money you've made over your working lifetime. You're either going to do one or two things. You're either going to invest it yourself, good for you, or you're going to give it to someone else and say, here, you do it for me. Okay, once you do it for me routine, you ain't going to get the kind of returns that you want. Okay, I am showing you something here that no one's probably ever shown you before. A safe, predictable, consistent way to get 1% per week. That's over 50% per year. Using nothing but pre-qualified dividend stocks. And the stocks I've been sharing with you are companies you probably heard of. Home Depot, Lowe's, General Electric, Macy's, Nordstrom's, Hewlett Packard, Wells Fargo, Bank of America. Household names, you've heard of them all. Okay, let's keep on moving. VTS is a no. Great job, thank you for the information, it's really helpful. Anderson, glad you like it. Cache Wilder, thank you for explaining. I was wondering the trends for dividend stocks leading up to the dividend. Not all of them do that. It hurts every time I cough. I was over at my son's house swinging a machete around. Now, if you swing a machete the wrong way, you can pull a chest muscle right here. Every time I breathe, every time I cough, every time I move, it's like, oh, searing pain. But you know what? It reminds me that I'm alive, you know. All right, if the stock price doesn't go above your strike price at expiration, do you just sell another call? Cache Wilder, that's exactly right. Let's get back to that and I'll show you. Market watch, there we go. Let's put in Lowe's. Okay, so here's Lowe's right here. Okay, on the 23rd of October. Okay, we all know the 23rd of October is next week. Sorry, October starts next week. Okay? The 23rd. If I want to buy Lowe's 2 weeks before on a Monday. Now, if I buy it at the opening of the day, let's say hypothetically, let's see what it is. Okay, so here's your prices over here. Here's the date. It's the opening, the high, the low, the close, whatever. Now, let's say, hypothetically, I buy it at the open, 269. Well, the closest one's going to be the 270. Brings in 140. Not 1%, I probably wouldn't do it. But if I did, let's go back to the chart. So we said 170, right? All right, so 2 weeks before, on a Monday, 7th, okay, if I buy it for 270, right? First thing in the morning, I buy it for 270. First thing in the morning, I will sell a covered call at 270. The exact same price I just paid for it. I will collect a 1% premium. Just go with me on this one. A 1% premium. Now, if comes Friday, if it's at 270 or higher, I will be all back into cash coming into the 14th. Okay, well, let's say hypothetically, it's at 269.99, 1 penny below 270. Okay, well, they're not going to call me out. I still get to keep that money, and then I take all those stocks and I sell another 270. Remember, it's at 269.99. Well, of course, I'll sell another 270 and pick up another 1%. Okay, either I hit my target or I don't. If I hit my target, great, I'm back into cash. If I don't, I take it into the next week and I write another covered call. So, one covered call, 1%. Great. Second covered call, 1%. Now I'm up 2% already. Third covered call, 1%. And I collect the dividend. That's 3% plus the dividend. And I keep doing it over and over and over again. Now, does it work every time? Nope. The longest I've ever held anything was 9 months. Last year it was Kimberly Clark. I bought it, she dropped, floated around the bottom for a little bit, came back up, I sold for a profit. Now during those 9 months, I've collected 3 dividends and over $36 premiums. Remember, there's 13 weeks in a quarter. So if I get one dividend, well, the next dividend is 13 weeks later. Okay, so I buy it 2 weeks before. That's one dividend. So 3 dividends and about 30 something different premiums. Longest I've ever held anything. And now I've been trading for over 20 years. Longest I've ever held anything was Kimberly-Clark, 9 months. At this current moment, I have Wynn Resorts, WYNN. I bought it back in May, June, July, August, September. Now we're into October, coming into October, and I still have it. Now, I've collected dividends twice so far. I'll be collecting another dividend this coming quarter because we're coming into the fourth quarter. But I've collected a premium every single week. And I have no intention whatsoever. Remember rule number 2? Never sell at a loss. I have no intention whatsoever to sell it for less than what I paid for it. Look at that, we're 11 o'clock already. Got another half hour to go. Let's keep on rolling. Cachet Wilder. Thanks for explaining. I was wondering the trends for the dividend stocks leading up to the dividend date, and how to take advantage of the trend. Well, there you go. If the stock doesn't go above the price, we just did, yep, that expires the following week, or do you exit the strategy? No. You keep doing the strategy until you hit your target price. Why buy 270s and sell for 270 right away? You get to collect 1% premium, or what's premium? So currently, now I wouldn't do this trade because the premium is not high enough. But at 269, well, they don't have a 269 premium. It's 267.50 or it's 270. Well, the 270 is going for 141. That's not 1%. The 267 is going for 219. I wouldn't do either one of those. 86, dude, your watch broke? Your watch broke, dude? 9 o'clock. We're here at 11. You just coming here? Giving you a hard time, man. Nice of you to show up, brother. Okay, so Shelly, always take a look at the numbers. Remember, rule number 5 is make sure the numbers work. All right? Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company's consistently profitable. Rule number 4, okay, make sure there's weekly options. And rule number 5, make sure the numbers work. Okay, what are the numbers? Okay, the numbers are, what am I buying it for? What is the closest strike price? What is that premium going to be? Is that 1% or more? Well, if it's less than 1%, it's going to be a no. Okay? Then I go to the chart. What is the chart telling me? Okay, I went over the high, the low. Where was it? Where is it? What direction is it going? Okay, blah, 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 blah. Yeah, wind jumped 8% today. Maybe you'll get out and sell it soon. Nope. I'm stuck with it for a while. Thank you for explaining. I am learning terms still. Shelly, I appreciate you coming by. I'm glad that I am taking up space in your head, because 10, 15 years from now, someone can say, hey, where'd you learn that? And you're going to say, Dividend Stock Talk on TikTok. If I buy a deep in the money call and then sell an at the money a call against it, do I still get dividends? No, you do not. Dividends are only for people who own the stocks, not for people who buy the options. Joel, do you have a Discord? Yes, I do. Discord is only for the paying members. Sorry. I have a morning trading group that we trade every day, Monday, Tuesday, Wednesday, Thursday at 9 a.m. Friday, we jump on at 3 p.m. You want to make sure our positions are going to be profitable for the next week. John, bought stocks drops, sold calls below stock price to keep my 1%. Now stock is up again and the call is in the red. Okay, roll it forward. Okay, what's the best strategy to do? Okay, so if you have a position, right, like take Able Mall for instance. Okay, I want to roll it forward. And what does rolling it forward mean? Well, rolling it forward means I am buying the current in the money strike price. You know, you said you sold it at a lower price, now it's in the red. Well, you buy that one back and you go out another week and you sell another one. What you're doing is you're getting another week's worth of time. Because when you do this strategy, there's 4 people on the dance floor. Let me explain. What do I mean by the dance floor? Well, there's 4 people in this equation. One is me. I'm the option seller. 80% of all options expire worthless. I want the option to go from whatever it is, the 1355, I want it to go to 0 as an option seller because 80% of all options expire worthless. So I want to be a seller, not a buyer. Now, that's one person. The other 3 people in this equation, you have an option buyer. Strictly, they just buy options. That's all they do. Well, an option buyer has a different mentality. They want to double or triple their price. So, let's get out of there. Okay, so here's the options here. So, if I'm a seller, I'm looking at this over here. These. If I'm a buyer, this is what I'm paying. Buyers, sellers. So at 95.50, the closest one is going to be the 96. The 96 is going for 273. So if I buy the stock at 95.53, sell the option at 96, which is more than what I paid for it, I'm collecting $2.73. Well, $2.73 on a $90 stock, that's 2.5%. Let me finish, hold on. That's 2.5%. Okay? Now, what's going to happen? If the stock goes up, well, the option value is going to go up also. But if I sold an in-the-money one, which you're talking about, what I'm going to end up doing is I'm going to end up buying this one back at $2.97, and then I'm going to sell the 96s for next week and collect $4.90. Well, I'm collecting another $2. Great, that works for me, and I'm buying more time. Okay, so the 2 people we talked about so far: me, the option seller, the option buyer. He's going to want to double or triple. So if he buys it at $2.97, he's going to want to sell it for $6 or $7, whatever. Hold on, cachet. Okay, so the option buyer wants to double or triple. So you have to be wary of where is your option at this moment. Okay, so now that's 3. That's 3 people. The third person is the stock buyer who wants to buy a stock at a lower price. Okay, so buying a stock at a lower price. So if a stock buyer buys at $2.97 and the stock price jumps up, well, they have the right to buy it at the 96 because they've already paid that money, and the stock jumps up, they can get the price at a discount. That's person number 3. Okay, where are you live at? In my spare bedroom. Person number 4 is the market maker himself or herself. Okay, the market maker. The market maker is this person right here. This is who we buy from. This is who we sell to. Okay, so if you think I can buy a stock and sell it to you, it doesn't work that way. If I buy a stock, I buy it from the market maker. When I sell a stock, I sell it back to the market maker. Now, I'm on Thinkorswim, which is through Charles Schwab. Now, if you are on Robinhood, Acorn, or whatever mobile app, when you buy a stock, you're buying it from the market maker. When you sell a stock, you're selling it to the market maker. You can't buy it or sell to someone else. You just can't. I've been a good boy just sitting here listening. Contrarian trader. Well, thank you for that. All right. I'm here every night. Come, listen, and then, critique me. Tell me what I'm missing. Tell me what I need to do. I'm more than happy to do that. But anyway, so there's 4 people to take into consideration when you're buying and selling. You got to watch out for the market maker, because if you're in the money come Friday, okay, whoever the option buyer is, if he's not double or triple, he's not going to exercise it. He's just going to let it go to 0, which as a seller I'm looking for. Now the stock buyer who wants to buy at a discount, if he can't buy it at a discount with the option he buy, well, he's going to let it expire. But you know who's not? The market maker. If you're 1 or 2 pennies in the money, he will take it from you. Okay? It is that simple. So, always on a Friday. That's why on a morning trading group, we're always on at 3 o'clock. You're absolutely right, contrarian trader. The option, the market maker makes his money from the spread, the bid and the ask. Well, look up here. The bid and the ask. 95.41, 95.53. Well, that spread is 12 cents. I know it doesn't sound like a lot, but 12 cents, 4.3 million. So let's bring the calculator up just for the fun of it. Okay, let's clear this. Okay, now we said he makes 12 cents per share, every share that's bought or sold. Whether it goes up or down, market maker don't care. As long as the stock is traded, every stock trades, he makes 12 cents. I have a 401k, former employer. Can I use that account to trade covered calls? Now, some, you'd have to check with the rules. Some 401ks limit what you can do. Now, you can transfer your 401k to a self-directed IRA. Okay? So a self-directed IRA, you can put it anywhere you want. Let's go with this example. Okay, so if the market maker is making 12 cents a share, and today 4.3 million shares traded, well, let's multiply it by 4.3 million. And the market maker today, just today, on this company made $516,000. That's a lot of money for one person. But that's what the market maker does. He gets the information, he decides what to open it for. Okay, so there's only one number that is controlled by one person. That is the market maker. Okay, so you have the bid, the ask, the high, the low, the open, the close. Okay, the close, 95.17. The bid, 95.41. The ask, 95.53. How much volume? 4.3 million. The open, the high, the low. All those numbers, only one is controlled by one person. Okay? Only one number is controlled by one person, and that is the opening price of the day. Now, you and I, we are the ones that figure out, are we the ones that create the highs and the lows? Let's zoom in here. Let's get rid of this. Let's zoom in. Okay? Each one of these represents one day. The high, the low, the open, the close. Okay, we control the high of the day because we keep buying until we say, wait a minute, that's too expensive. That's the high of the day. And then we start selling and it starts to drop. That's the low of the day. And the close is whatever we stop at. Okay? That alone, open, is only one that's controlled by one person. High, low, close, volume, that's you and me. Okay, so Cachet Wilder, what is the benefit of buying the stock and selling calls instead of selling a put to collect 1%? All right, Cachet, there's absolutely no difference whatsoever. Now, what you're missing, but you're right, what you're missing is that this strategy was created for a 9-year-old little girl. As a matter of fact, you're new, you've probably never seen this. So here we go.
My internet website. Hi, I'm Tracy, and as you being part of my internet website called Thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
That's my daughter when she was 9. Okay? Sorry, when she was 11 in 2012. I came up with a strategy when she was 9 in 2008. Okay, so that's her in 2012.
List number 1.
20 days in the month of January.
January, you can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year. And if you get at least 2%, that's 20%. That's close to 50% a year. 50% per year. That's cool. Anyway.
Yep, that's me. 2012. See the video? Date. What the heck is the date? Where the heck is the information on that thing? Yep, right here. Where was it? I just saw it. All right, right here. 12 years ago. Okay, that's me. 12 years ago, saying the exact same, almost the exact same thing. Pretty close. But yeah, it was created for a 9-year-old. So when you talk about puts have obligations. Okay? Look at it this way. Simple, safe, predictable, consistent. If I had her start selling puts first, yeah, that gets a little bit more complicated, and I'd probably lose her. So here's the thing. You're talking about cash secured puts, where you're taking a chunk of money, you're putting it up, and you're getting a rate of return. Lovely. Covered calls is basically the exact same thing. You're taking a chunk of money, putting it aside, you're getting a return on it. Yep. You could do the wheel strategy, what you're talking about. Yeah, it works. But it's not simple. Okay? You're missing that point. Simple, safe, predictable, consistent, and then no way to lose. Yeah, next time you know what? Let's see if we can. Remove. There we go. All right, so I just removed him. He was getting a little bit out of hand. So I hope that makes sense. Now, don't get me wrong. I do enjoy cash secured puts. I just don't teach them here because it's not that simple anymore. Well, hopefully that works. All right. All right, what do we got here? All right, Jonathan, why don't you sell call 5 points in the money that has a 1% premium? Because it doesn't always work that way. Gemma Sexy, hey James, what about Intel and Colgate Palmolive? I guess you can lose. Look at Walgreens. It could become another Rite Aid, so it will never get to 20. There's a difference between Walgreens and Rite Aid. Now, I don't know that much about Rite Aid. Hold on a second. I was asking if the stock drops, do you sell a strike price lower? Yes. Isn't that a loss? No, it is not. Do you have to buy the call back? That's a loss too, right? No, it is not. Okay, so contrarian trader, you're relatively new here. So here's the thing. If I buy it at 100 and it drops down to 90, okay, well, when I buy it at 100, I sell the 100 call, I get my 1%. Great. Well, now it's at 90. Do I sell a 90? No, I'll sell a 95. I don't want to sell at the money because in case it goes back up again. But I have the opportunity to roll it forward because on Friday it gives us a whole bunch of different opportunities to make different choices of what is the best place to either what. What are we going to do? Are we going to let it ride out? Are we going to let it expire? Are we going to buy it back? Are we going to roll it forward? What are we going to do? I can't answer that question on a Thursday night. I can only answer that when I have the raw data in front of me on a Friday afternoon at 3 o'clock. Because on a Friday afternoon at 3 o'clock, I can go into here. Hold on a second. Let's go here. Okay, and I click here, and then I take a look at the chart. Take a look at the trade. Okay, what did I buy it for? Well, I bought it back. I bought 500 shares at 90.78. I sold the 81s. Well, I'm losing money because right now it's at 95. Okay, I bought it at 90. I sold the 81 calls and I collected $13.55. Well, come tomorrow afternoon, if she's still above the 81, well, I'm at risk of being called out. However, I sold the 81, I got 13.55. So you add that to that, and how much am I making? Well, because I got the premium, and that's the call. However, I do not want to sell it at 81 because I'm at risk of losing. So I will roll it forward, and I'll go into 4 October. You see it? I rolled it forward to go to 4 October. That buys me another week of time. And it always, always, always comes down to the numbers. What did I pay for it? What premium did I collect? Where is it now? How many days to expiration? Do you get another premium rolling it forward? Well, let's check it out. Ready? If I right click, create a rolling order, okay, here's the rolling order. You see it? I'm going to buy back the 4 Octobers, and I'm going to sell the 11 Octobers. That's giving me another week. And I get an additional 7-cent credit. Granted, it's not a 1%, but by rolling it forward another week, it allows me another week for the stock to move in whatever direction I need it to. So if the stock is too high, eventually it'll come back down. Once it comes back down, the value of the option will change. And when the value of the option drops down to a certain point, because right now I sold the option for $13.55. Currently, the option is at $14.72. Well, I'm losing money here. But I've gained another week, and this option won't expire until next Friday. So when next Friday comes, I have to do the exact same thing. Well, what did I sell it for? What's it currently worth? Am I at risk of a stock buyer looking to get a discount? Am I at a risk for him buying it? Or am I at a risk of somebody else buying it? Can you change the strike price? Yes or no? Okay, so right now it's at 81. So if I change it to 85, well, now I have to pay. I don't want to pay. So if I don't want to pay, I have to change it back to a place where I don't have to pay. Okay, I don't have to pay at the 81, getting more time. But as the stock price pulls back, the option value will decrease, and then I can change the times. I can change the strike prices. That's why I tell people, if you're really serious and you really want to do this, come join the morning trading group. It's $100 a month. You get to ask all the questions. Oh, got it. Very interesting. Thanks for answering. Well, that's what I'm here for. Okay, I got tired of getting screwed. Okay, I am one of those people. I'm not sure how many of you other ones are the same. I'm at the shitty end of every stick. Okay, when I want to borrow money, well, they want to charge me this. When I want to do this, well, they want to charge me that. Okay, when I want to invest my money, this is what they're going to give me. So if I took all the money that I have, gave it to a money manager, well, they say, yeah, thank you. We're going to give you a 4% draw. Well, a 4% draw on what I currently have, I'll be going back to work for another 10 or 15 years to make enough money to have a 4% draw and pay my bills. Right now, I'm making 50%. There's a huge difference between 50% and 4%. Okay, so I decided long ago, I'm going to do my own investing. I'm going to take responsibility for my own money. You will find as you progress in life, most people will spend more time and more effort planning a weekend barbecue than they do on their personal finances. But here's a secret you may not know. You know it in the back of your head, it's there. At some point in time, you are going to retire. You are going to be incapable of continuing to work. Okay? Now, I'm 60. I don't like admitting it. That I can't do what I used to do 20, 30 years ago. Okay? I still play soccer in an over 60s league, which means I go out on Sundays and I play soccer, run around with a bunch of, old guys. But it takes me 2 or 3 days to recover. Unless you're contrarian. Okay, hold on a second. Now, I'm going to touch base on that one. Now, he just said, unless you die on the job. So there's only 3 ways you're going to stop working. Only 3. Okay? One is age out. That's when you get too old to work. That's age out. Number 2 is walk out. That's when you have enough money and your investments are giving you enough to cover your monthly bills. That's walk out. Age out, walk out. Number 3, what Contrarian said, toe tag. Toe tag out. Okay, you know how many people die while they're still working? A whole bunch. On the way to work, on the way home from work. Okay? All right, so let's keep on going. We only got a couple minutes left. Chama Sexy wants to take a look at Intel and Colgate-Palmolive. So let's take a look. Now, I thought we already did Intel today. Intel, INTC. Let's move this over so we can take a look at that. We can get rid of this because we don't need it. All right. What about Siri? Okay, I guess you can lose. Look at Walgreens. It could become another Rite Aid. Okay, so MC8080. Now, when you say Walgreens can become another Rite Aid. Now, I don't know the numbers for Rite Aid, but I do know the numbers for Walgreens. I've been following it for a while, and Andrea, who's here in the audience, she did a very nice report on Walgreens, and she enlightened me some things I didn't know. Well, number 1, Walgreens has been in business for over 170 years. That doesn't mean they can't go broke, because they can. However, there's over 8,700 different stores worldwide. I don't think Rite Aid had that amount, had those numbers. Third, Walgreens owns some makeup lines. The makeup line that Walgreens owns is currently in 22,000 stores worldwide. So it's not just the Walgreens and the pharmacies. They own other stuff. They got the real estate, they got the stores, they got the pharmacies, all that kind of nice and fun stuff. Now, the reason why Walgreens is where it's at is because, and I say this every night, and eventually I'm going to get blocked, scammed, blamed, whatever, thrown in jail. But it's true. The current administration does not want to prosecute theft. You can legally steal up to $900 worth of crap, and they won't do anything about it. What kind of message is that sending to businesses? Well, Walgreens got the shitty end of the stick on that one because people keep stealing and you have a lot of stores that are in the red. So what's Walgreens going to do? Walgreens is going to cut 25% of their stores. Then they're going to reorganize a bunch of stuff, move some stuff online, blah, 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 whatever. Anyway, Andrea did do a good job on the report that she did. And I'm going to upload it to the Patreon and I'm going to upload it to the Discord. Okay, but Walgreens is going to need about 6 months to a year, maybe more, because once you cut out 25%, well, there's 8,700 stores. Well, 25% has got to be at least 2,000 or 3,000 stores. They're eating our pets. Yeah, that's horrible. It is what it is. Okay, remember, back in the Depression, people were eating some weird stuff. It's called number 7 makeup for Walgreens. Yeah, it's in over 22,000 stores worldwide. Thanks for that, Becca. Yeah, they own something else too. I don't know what it is. Is IBM too expensive for this? There's no such thing as too expensive. Okay? IBM, I wouldn't do it because it's at a high of the year. See? I personally do not buy at the high because if it was worth 250, it would have already been there. So right now it's at 223. It has never been to 225 this year. What makes me think just because I buy it, it's going to continue to go up? I don't buy at the high. It doesn't make sense. Okay? When you've heard over the last decades making money in the stock market, you buy low, you sell high. You don't buy high and wait for it to go higher. That doesn't work. Look what it does. Went up, down, 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 up, down. That's all it does. Little tiny moves. Up, down, up, down, up, down. Okay? Once it's at its high, we'll keep an eye on it. Once it drops, then buy it. Just curious, no offense. Angel, I'm not quite sure what you're curious about. I must have missed that question. Okay, missing that question still. Hey man, I have a lot of Angel, hey man, you have a lot of knowledge. Why do you decide to share YouTube and not use it yourself? Angel, Angel, brother. Hold on one second. I want to show you something, just for the fun of it. Whoops, I don't want that one.
Buy.
Okay, go back to the oldest. There's that one, that one, that one, that one. Hey, take a look at this one right here.
Good afternoon, everyone. This is James. As you can see, the last 30, she found a peak.
1 year, 90 days, 30 days.
There's a little bit of
March 23rd, 2013. I've been sharing this stuff for decades.
Let's see if the dividend tank can push that forward the edge. Okay, Universal Corporation going sideways for.
Okay, so I've been sharing it for quite a while. Now, do I use it myself? Well, yes, I do. Well, how else do you think? I don't have to go to work anymore. I retired last November. I decided I had enough. I've been working since 1973. OMG, those charts are old. Yeah, I know. Yep. Well, when I tell you I've been doing this for a while, I actually have posted on YouTube videos of me doing this decades ago. Do you trade one stock per week? No. Jonathan, I don't. As a matter of fact, this account here has got 7. Okay? This account here only has 4. This account over here has 8. Okay? Now, I only share 3 accounts with you guys because I want you guys to see the difference between all the different trading strategies. How many shares? Well, they're anywhere between, okay, CVS right here. CVS, 700 shares. Halliburton, 1,100 shares. Kohl's, 2,000 shares. Marathon, 4,000 shares, so on and so forth. Sultan Screenshot sold in UK too. No idea what that means. Okay, so that being said, we're at 11:29. Questions are all answered. What are the chances all of those are back into cash Monday? Okay, now, contrarian trade, that's an interesting question. What are the chances all my positions are back to cash on Monday? It's only happened twice. Okay? Only twice. Now, I've been trading for 20 years. This particular strategy for 15 years. Only twice has all my positions been cashed out and I'm 100% cash by the end of the week. For Walgreens, sunscreen sold tanned in the UK. Okay, cool. Guidance. James, if we work school day and we can get off 6 or 7 or weekends, would it work to learn? Okay, here's an interesting one for you. Okay? Now, when I did my trading, all right, you're going to love this. Are you ready? Let's say, hypothetically speaking, 223, 225, no. Which one did we use a little while ago that looked really good? GM. Okay, look at GM. All right, let's look at GM, General Motors. All right, here's the thing. Now, if you like the trading strategy and you're concerned that you're not available to trade Monday through Friday when the market is open, such as it opens at 9:30 and it closes at 4. Okay, here's the thing. I used to do all my trades before the market opened. Well, how do you do that? First and foremost, decide on a price. Okay, we're looking at General Motors. Here's the high, here's the low, here's where it was, here's where it is. It went up, it went down, it went up, it went down. Now it's going back up. It's currently at 45.81. The 46s, I can buy the 46s, and I can sell it for 71 cents. Now, let's do a little bit of math. If I like it at 46, okay, it's the price right there, 46. So let's do a quick trade and see how it works. You ready? Let's get rid of this. First thing I want to do is I want to change this, which is single, and I want to click on covered stock. Well, there it is. There's the covered stock. Here's all the options. Okay, 27th September, that's tomorrow. 4 October, that's next Friday. That's the ones I want to look at. I don't want to look at these. Okay, so let's get rid of those. Now, remember I told you I liked it at 46. That's the current price. So I want to come down to the 46 and I want to buy it. See that little icon? It says buy. That's my clue. I'm going to buy it. So I'm going to click on there. Now I have mine preset to 1,000 shares. If you can't afford 1,000 shares, go to 100, 200, 300, whatever you want. Okay, so if we do 400 shares, okay, I can change it to whatever I want. 400 shares, 300, whatever. But here's the thing. When you're doing a covered call in this way, they are tied together. So I am buying 400 shares and simultaneously I am selling 4 contracts. So every 100 shares equals to 1 contract. All right, so I am buying 400 shares of General Motors for October. This is next Friday, and this is the price. Now I want to change that to a market order. Okay, market order. Now I want to hit confirm and send. This is the actual order. Buy 4 covered calls of General Motors, October 4, 2024. This is for next Friday. Okay, so I'm buying the stocks first thing in the morning. I am selling the option that expires on the 4th of October. So that gives me 9 days, or 8 days. 8 days. Okay, now I am collecting, well, wait a minute. My break even, okay, it's very important. Always look at the numbers. Remember, rule number 5, make sure the numbers work. So if I'm buying it at 46, I am selling the 46 call strike, and I'm collecting $370 on 400 shares. Okay, remember I said safe, predictable, and consistent? It's telling me exactly what I'm making right there. All right, so I'll get out my trusty calculator, and I want to take my profit, 370. See my profit right there? That's my profit. My break even is 45.07. Well, it's currently at 46. So if the stock stays the same or goes up, I'm making the money. It could even come down a little bit. As long as it is above 45.07 come Friday, I'm in the money. I'm making money. Okay, so how do we figure out my rate of return? The profit, 370, okay? And I divide it by what is it costing me for the trade. Okay, so that is right here, $18,032. If that's too much for you, well, buy 200 shares. Buy 100 shares. Find a company that you like. Okay, I'm going to divide it by 18,032. My rate of return is 2%. So General Motors, which I'm sure we all heard of, I can buy General Motors first thing tomorrow morning, the opening number at 46 bucks. I can turn around and sell it to someone for 46. Here's the trade right here. Now, what I'm doing, get rid of that. Once I hit the send button, this actually gets sent to the market maker. And first thing in the morning, the market maker will fill it. You don't have to be there for the market maker to take it over and do it. And then you take a look at it when you get home from work. Okay, what did I buy it for? So you come under monitor, well, there's the positions right there. Okay, these are the positions I did today. Okay, and then it tells you the positions. Well, did I buy something today? What did I get today? What did I do today? You don't have to be there. Every morning trading group trading session is recorded and it's uploaded to Patreon for anyone who is part of the morning trading group. Will that fill on pre-market, open market? No, it won't. It will only fill during market hours. Well, sorry, unless you specifically right over here. No. Day trade, limit order, good to cancel, best. Well, there's usually one in here, market limit order, GTC, good till cancel. Oh, that's for selling, that's not for buying. For buying, you have what's called a good till cancel, and it allows you to do extended orders. Oh, wait a minute. I could do it this way. Hold on a second. Okay, so I owe this right here. Let's create closing order. Create a closing order right there. Okay, there it is. Right there. There it is right here. Okay. This is open. It's either for a day, good till cancel, extended, good till cancel, extended time. That's before hours and that's after hours. And you have morning trading or PM trading. Okay, they're all right there when you're selling. When you're buying, it's a different story. So you know I don't want to do that. All right, so we're past 11:30. I am done for the day. Let's finish up. So guidance, yeah, all the trades, all the morning trading group are recorded. They're uploaded and they're available for anyone who is a paying member to see them. So all that being said, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow and take you along for the ride for a safe, predictable, and consistent 1% per week. You guys have a great night, and we'll see you again tomorrow. Now, for those of you in the trading group, okay, 3 o'clock tomorrow,